Our guest this week is Levanon, founder of Selah Ventures. Selah is a Tel-Aviv-based firm that's a first-check investor into fintech startups that are building in the U.S. We talked about fintech, why Israel has more unicorns per capita than the U.S., the state of the Israeli venture scene today, and the advantages of being a solo GP. Please enjoy. Adi, thanks for coming on the show.
Thanks so much, Joe. It's great to be here.
So we're going to talk about investing, startup scene. I guess maybe just to get rolling, can you tell us about your firm, Selah Ventures?
Yeah, for sure. I love talking about it. So Selah Ventures is a first check, you could say pre-seed, seed stage fund investing in fintech-focused opportunities with the kind of demographic focus being on Israelis, wherever they are in the world, and Americans that want to build and scale in the US. And I take a really broad approach of fintech, which we can probably talk about more today, I assume. But yeah, being extremely early, fintech focused and collaborative is really what's important to me.
Okay. And what drew you to fintech in the first place?
So I've been an early stage investor for over a decade now, which kind of gives away how old I am. But it's something that I've really enjoyed doing since I started or even heard about venture. And when I started, this was about end of 2012, 2013. This is when, the world of, at least here in Israel, there was more of a focus like on the Bitcoin space. We didn't even call it crypto, Web3 back then. So I looked at a lot of companies in that space, which was really intriguing to me. And then we also, the fund I worked for, we invested in the payments company. And so when I moved to New York, this was late 2014, I knew that I wanted to build an expertise. It was really important to me. I also got advice from a kind of a VC veteran here in Israel that said, you really should build an expertise, be very laser focused. And I just figured, based on my background being a lawyer, the things that interest me, where I worked before as an operator too, I wanted to do something that wasn't ad tech, like the company I worked for before, or media and the like. And if it's New York, I was like, this is going to be finance, right? I didn't even know about the word fintech. And so, I thought just with what I've seen in like I said, the Bitcoins in the payment space, that was something I wanted to look more heavily into. And I was really fortunate that after a few months after I moved to New York and I was looking for a job in VC, it definitely took a while. I was really lucky to meet the two GPs that were managing a fund called Fintech Collective. And as the name would imply, we invested in fintech companies. They were early stage. They were a small fund back then. Now they hold, I believe, over $500 million in AUM. I think on fund 3, I believe, if I'm not mistaken. Great guys. And so, it was just kind of this perfect, in a way, there was what interests me, my background, considering that fintech is so heavily regulated, and I was head of compliance at a startup before. So to me, it just kind of resonated really well to enter those type of opportunities. And I was really lucky, like I said, to work with, two GPs that came from finance and helped build and scale and sell a few companies in the space. So I really got exposed to what fintech was really early on, and then just continued down that path.
I want to get you to nerd out on infrastructure in fintech, but I do want to go back and hit rewind. What is the origin of the name of your firm, Selah?
Selah. Okay. So I know it's a weird word to say, I think, in English, but Selah in Hebrew, it actually has two meanings to it. Or it can mean two separate things because it can be spelled two separate ways in Hebrew, but sounds the same. So Selah spelled one way means a rock or a boulder. So really like the basis, can't move, strong and steady. Selah spelled another way is actually a very spiritual word. It's written, I think, 75 times, I believe, in a religious book. And there's many different meanings to it. Over the years, people have, I think rabbis and the like have tried to give it different meanings. And one of the meanings or definitions that I read was to lift and to elevate. And so I love the concept of being the steady boulder, the base, but also helping take to the next level and to lift and to elevate. And that's a lot of what I like to do with the founders I work with and how I see kind of the fund going forward.
It's a great name. You nailed it.
Thank you.
Thank you. Good.
Thank you.
Yeah. Mutual friend of ours, Michael Morgenstern, who works at Brex, done a lot of early stage investing himself over many years. He told me to ask you about what about fintech infrastructure in particular interests you?
Aha. Hey, I think he's following my post on LinkedIn. No, I love Michael. He's phenomenal. And Brex, the whole team there. It's a great question. I think that, so I'll take a step back. So fintech, like I said, when I joined and there were more fintech funds started focusing on that specific category, this was like 2000, 2012, 13, 14. This is really when just like fintech started becoming a search term, even in Google, right? Like, what is this thing? And when it started, it was, this is not something I coined at all, but there was the term of like the unbundling of the bank, right? So fintech was really, how can we take these different solutions being offered by different financial institutions, whether banks, insurers, and the like, and then make it better for users and customers and clients. So really it was like, digitizing and customizing it in a better way, external from these different institutions. And so, you could see that in payments being done differently. You could see it in lending being done differently, wealth management, capital markets, insurance, and the like. And that's what really it was for a long time. And together with that, you were seeing some companies that were more focusing on, I would say, more of the back end, more of the data, more of the, let's say, not necessarily the money movement, but being really the back end that would help a lot of these different transactions or these different institutions really do better at what they wanted to do. And so over time, what I found has been, I think, more interesting in fintech, and where I think fintech is going is more on the infrastructure side, meaning anything from really like actual cloud services, because obviously a bank today is now, and insurers as well, have moved to cloud and even multi-cloud, right? They have to as a way to secure their data. The focus obviously on KYC and KYB, with more transactions being global and businesses growing and more small businesses being built. How do you actually have a better way of assessing who your customers are? So there's so many different aspects. So it's not necessarily going to be, I say, typical quote unquote payments or lending, but it'd be a lot more into, the fraud and identity, the KYC. How do you basically protect data? So like really data governance and the privacy protections that you need, that you really see more on the back end. But a lot of these companies then will take what they're building, usually API based, by the way, and sell that back into banks, insurers, other large fintechs, by the way, but also SMBs. So that's maybe like a little broad, but a little bit broader of an answer. But really, to me, fintech infrastructure is just so many different type of technologies, obviously with the buzzwords of Gen AI and the like, and also cyber even related, that are really enhancers to existing financial institutions, which is a little bit different than what I said before of like fintech being, let's unbundle and do it separate from the bank. A lot of the fintech infrastructure is actually going to be sold, I believe, back into a lot of these institutions as well. And I think that to me, that's really compelling because it's going to look like a vertical software play in many cases and doesn't necessarily seem like a fintech, but because the go-to-market is mainly going to be to those type of institutions, that makes it a fintech in my mind.
Where's your interest in crypto at large today? Which I think a lot of people would bundle. Sometimes they bundle it under fintech, sometimes they don't. Fintech itself is like a very big tent that a lot can fit underneath. But how do you think about crypto broadly today?
So no, it's a great question. And I definitely put Web3 and crypto, more Web3, to be honest, than I crypto, but under fintech for sure. One of my thesis areas, I actually call it the transfer of ownership, in the sense that, and to me, it means two things, just to touch on that. Like, to me, it's everything related to Web3 being like, what is the ownership of this? What is ownership? And then what is an asset, right? Because we've all seen like NFTs and the like, but I think Web3 is so interesting in what it's done in that question, right? So I definitely want to invest in Web3 related businesses more than I would say crypto. Like the last investment that I did personally before I raised Selah Ventures was a company called Tweed, which is very much in the Web3 space. They're two female founders in New York, backed by Excel and now Andreessen. So I definitely like more of, I would say, again, the infrastructure side of Web3, more things that have to do with like smart contracts, DeFi. I'd love to see more things in this space that touch upon like that whole, what is the ownership and how does ownership of something change because with the use of Web3? And I think that obviously I'm excited about Web3 because, or crypto, I guess you could say as well, because of the shift in regulation. I feel like there's something good happening again. So I'd love to see more, and I'd love to do more in that space. Unfortunately, haven't in the fund yet, but I'm very open to it. And maybe just to touch on the other side, transfer of ownership in my thesis, which isn't crypto, but that's also around how I look at like the transfer of wealth as well. So what's going to happen as we have like a generational shift, and how that's going to affect wealth management and generations to come when it comes to capital management.
I want to talk about startups and the startup scene in Israel in particular. I don't think most people would know this. I did not know it until I Googled it, but Israel ranks second in the world for unicorns per capita. It's actually ahead of the US. Can you speak to why the country punches so much above its weight with startups?
I've been here for years now, and I've been in the ecosystem for so many years, and it still is continuously just amazing to realize that a country so small with so much complexities can really build such amazing things. It's a lot of it's many different, I think, attributes to it, but one obviously being just, when you come from limitations in resources in a market, it forces you to think out of the box. And so I don't know if you've ever been, to Israel, but I mean, it explains like why we found Israel's created like, water irrigation, right? Like, I hope I'm saying it right, but like how do you take salt water from the ocean, but make it okay for drinking, and to also water plants and the like. And the fact that we found ways to grow flowers and vegetables in the desert. And all these different things where you're like, how is that, like, where does that come from? Well, it comes from necessity and just having such limited resources, getting land and then making it into something so much bigger, getting something so limited and finding ways to make it thrive. And so I think that since that has been kind of from day one and from generations to generations, when tech became so much more prevalent here, it was almost like a very clear trajectory in a way of what I think Israelis could do. So you see it obviously in like food and like water and those things that just we have to live. And when it came to tech, it also came from the necessity, obviously, from defense that had to be, implemented from the army going forward. So you have a lot of people that learned, whether they were in combat, by the way, or not, the opportunities, like different technologies, different ways of thinking, different ways of acting and managing, that obviously are really, really, crucial when you're building a business or when you're managing a team. We talked before we started recording about, being strategic. Like when you are young, we go to the army here at age 18, and you have to, at some point after you become an officer, you're only like, let's say 21, 22, and now you have to make people follow you, and you have to be a leader. So there's so much of that is strategic, and not only understanding people, but understanding how to get them organized. And so I think that, again, it's like limited resources, necessity, but also having a base really that came a lot from the army, and a lot of the technologies that were built and used in the army then became external. And so also I think, which is really surprising to many people, I've noticed this when I speak to LPs, they think that, if a company is founded by Israelis, that we're selling into Israel. And that's not the case. This also is really surprising to many, but it's different than, let's say, Africa that's building for Africa, or LATAM founders building for LATAM. There is no market here. There's, Israel's the size of New Jersey. So it's really building businesses with the go-to-market is always going to be externally, mainly to the US and then Europe, and then probably, I would say, Asia. So we've learned over time that taking these technologies and these great solutions, being able to also have a good business development and good product that is sold to the go-to-market. And I think that's lent to the ability to create so many different billion-dollar companies. I mean, we now have 20 different billion-dollar fintech companies founded by Israelis, which is crazy. I think there's about 18 in cyber. So yeah, we're continuously growing, continuously building. And as long as I think that drive is inherent in what it is to be Israeli, we'll continue building incredible companies. It's a long answer, but hopefully it touches.
No, it's great.
Points.
Well, it deserves it. It's amazing. I mean, it's funny. When you first started talking, I thought necessity is the mother of invention. And you're like, necessity. I'm like, yes.
But it's true.
Not in a long.
Yeah, for sure.
How would you were born in the U.S., correct me if I got this right. You were born in the U.S., lived here for a while, moved back to Israel, came back to America, lived in New York for a while, moved back to Israel. So you've been
Go back and forth.
An international journey, a few times now. How would you kind of compare, contrast startup culture in Israel versus the U.S.? And if you want, you can kind of narrow it. I know it's really broad. If you wanted to make it like Tel Aviv versus New York, or kind of pick your cities, because each little city has its own culture.
For sure. No, it's a really good question that I mean, so when I moved to New York, like I said, like what I realized first off, and this may have changed as New York has thrived so much, but what I loved about it, and I hope it's still the same. I'm curious how other VCs in New York will say today. What I loved about it is there was such a sense of camaraderie. Like we were sharing opportunities and talking to each other and sharing deals. And I don't know, to me, that felt very similar to a lot of how things felt back in the day also here in Tel Aviv. Now there's like so many funds, and there is definitely a lot of competition, I guess, depending on the stage you're in. But there still is a lot of collaboration too. You know which funds you can work with and who you bring into deals. And I feel like that is very similar, by the way, between Tel Aviv and New York. I don't know if it's the same in San Francisco, but I would think that again, I would feel also that like there is a sense of like, okay, I'm going to lead, but I like these different funds to come along with me. So even when there's competition, there's collaboration, if that makes sense. I think that also what's really great about, I don't know, just like recently we just had like a huge like event here for all the different VC funds, and there's just a lot of desire to work together and a lot of desire to learn from each other. And I don't know, I always feel like there's a lot of movement. We have a lot, like, it sounds like things are, definitely challenging, but there's still so much deal flow going on and things are happening. So it's just, I don't know, I think it's a very thriving and great ecosystem that reminds me a lot of New York in that sense, that we're working together, doing events, like being very active. And yeah, there's like now over 200, I think, funds here is what I've heard. So when you think of an ecosystem, again, for a country the size of New Jersey, it's insane. There's a lot of capital here now, local and even more coming from abroad. Like we just, Sequoia just opened offices. Excel have a lot of, they're very strong here. Insights here. So, you have like a lot.
Opened an office too.
Well, I don't know if it's rumors. I believe it's true, but I don't think they've confirmed. But they were here, by the way, in the past.
Okay.
But they were here in the past. This is like them kind of coming back, I guess, in a way. I've heard also other rumors of other funds, and some have said yes, some have said no. But I think it's great, like in the sense that now there is, or for example, I spoke to an investor somebody who I've invested with in the past. They're a great New York-based fund. And there was also a rumor that they were opening offices here. And he's like, nope, we're not opening offices, but we love Israeli founders. We definitely want to do more deals. And I think that's so great. Like I think that what's great about Israel is that, yes, Israelis will be here and want to, start building the tech here because their family's here and this is home. But like I said, like we don't build for this market. So it's great that you can get like your pre-seed money from great funds here, and you can immediately start working with great funds in New York or the Valley and then move when the time is right. And so the ecosystem here is like not just collaborative locally, but I believe it's safe to say at this point also really collaborative with funds abroad. And that's also how I function. Like I want other fintech funds that I've co-invested with to be in rounds with me. That's the whole point of when I say collaborative.
What should Israeli founders who want to grow into the U.S. know about that before they take the leap?
That's okay. That's a whole podcast in and of itself. But first of all, I would say that and I work with a lot of my portfolio companies on this, and it's crucial. Like fundraising it has to be strategic. You need to have a game plan. It's not just like, okay, let's start reaching out to these, usual suspects and let's go. You have to plan it out. I I always take the example. She wrote it really well. I think Jenny Fielding, who was back then, she was at Techstars, and now she has the Everything Fund, I think she called it, or the Everywhere Fund, the fund. I'm probably not saying it right. Sorry, Jenny. But she's great. And she did this great, like a deck and Excel sheet that just says like, this is how you should build your investor target list. And I think that a lot of folks here don't do that, but it's a must. Like, you really need to plan out who you're targeting, knowing who actually does pre-seed or seed, who has invested in your space, which partner you should turn to, what are their check sizes, and then reach out to your network and see who can make those intros for you. It takes time, but it's really, really important. I've seen a lot of great founders wear themselves out completely when they're fundraising because they didn't do that ahead of time. And they think they're maybe not good enough because they didn't reach out to the right investors, for example. So, and we all know that momentum is really important and the like. So I think that's one thing I would say. At least from my perspective, what I'm seeing that founders are doing well, they could do better, but at least doing well within the fintech space, is that like you really need to work on your validation from day one, right? So even if folks are ideating, and I work with a lot of teams that are ideating, it could be like, an operator, somebody who she came out of like one of the large fintechs and now she wants to be CEO, and I connect them with the CTO and they start working on something. If they're going to build something, they're going to already start talking to potential customers in the US. So like even before you go out and raise, go obviously test the market, make sure that you have folks that want to work with you. Don't do it just with the $1 billion Israeli companies. Don't. I think it's a mistake, because what you see a lot of times is Israeli founders like, yep, I have a POC with any one of the other, like you mentioned, so many different $1 billion Israeli founded companies. I think it's great. But there's a difference between selling to somebody who speaks your language and not just quote unquote, like, yes, they could speak Hebrew, but like, they'll be like, but it's a global company or it's IPO'd. Yes, but still, you need to show that you can get somebody from the somebody American who is in that corporation, who is in that environment to still want to work with you. It's a different sales process, if that makes sense. And so most founders that I meet already do that before they even meet me, and I'm pre-seed, which is great. But if they don't, I would say take the time to really build out your initial validation. And again, most founders do it great, but when I see a deck with a lot of like logos of his Israeli $1 billion companies as their validation, I kind of like, it gives me an itch because again, it's not the market. The market is there. So two things to keep in mind.
It's an itch or a cringe?
Cringe. Semi-cringe.
Okay.
But again, I completely understand it. I completely understand it. But like I would say, and I say this, and again, maybe I'm different in this, but maybe it's about the fact that I worked in the US, and I think like talk to 2-3 of those companies, exactly like you would do when you're fundraising, right? I always say like test your pitch with 2-3 friendly VCs. Make sure, get feedback from them, and then go back and make whatever changes you need to do. I think it's the same thing with building your sales pipeline. Like same thing. You can speak to 2 or 3 $1 billion, great Israeli companies that we have here. Go for it. Do it. But after 3, go get those folks in the US, because I want to see as an investor, I'm a pre-seed, yes, seed stage fintech fund, but I want to know that you know how to sell. I want to know that you can get to your target market, and it's not here.
I talk to founders sometimes who are based outside the States, and they are looking to raise from U.S. funds. As you would certainly know well, listeners may not know as well, is that U.S.-based funds will usually be pretty fussy about investing just in Delaware C's, Delaware C Corps. Now, there are plenty that will invest outside the U.S. There is a general bias towards that. When you're talking to companies that pre-seed seed, and let's say these are ones that are like organized or based in Israel, how do you talk to them about structure and kind of short-term, long-term, your advice for them on how to think about that?
So again, this will be controversial for some here. I definitely want to invest in Israeli founders that are structuring their companies as Delaware corporations. There is a debate on that. I can say locally, some other large VCs might say otherwise, but I think for multiple reasons, it's better to do it that way. And I think to your point, it helps US-based investors not even think twice. It's just an easier process. So I believe fully in like, help me help you. And so it's setting you up better for success that way. So I definitely say go with that structure, get a US bank account and get a US Delaware corporation set up and start working that way. And of course you have they have something that you need to do locally because you have employees here, etc. All good. But that's the structure that I would do. I think it's really important.
Yeah. I mean, obviously, different people have different opinions. I think a way to maybe frame it is if you're aiming really high and you're aiming global, then Delaware C seems like the logical way to do it. If you're looking to, like maybe lifestyle or sell sooner rather than later, then maybe you do it local. But yeah,
right. And again, it's complex. There's tax related things related and costs for sure, and it's a broader question like here internally, but like locally, I would say. But yeah, I agree with you. It's better to go big and then go Delaware, if that makes sense.
On the subject of kind of going big, I want to go back to your forming your firm. What led you to go solo? So you've got a deep network. You've worked in different countries, a lot of experience. I'm a solo GP myself, so obviously I buy into the premise. But what led you to go solo?
So I mean, I'll say like half a joke on this. Like I didn't feel that it was necessary to wait for like Prince or Princess Charming in order to build this, in the sense that like I think that I knew what I wanted to do for quite a while, and I think I worked at different funds. I saw the companies that I invested in, that we invested in, become really growingly successful, not just from a valuation perspective that we know is important, but really also like the operational metrics were there. The businesses were doing well. I saw that also companies that I invested in personally were doing well, and I realized also like that it locally there was this gap that were like cyber startups had cyber funds, but when it came to fintech, there really wasn't a lot of expertise at the earliest stages. There were a lot of generalist funds, fantastic generalist funds, so the best investors ever, but they were investing in fintech. And to me, that was surprising because fintech, like I said, is so heavily regulated. And it's so important to have, that understanding and knowledge and data points early on. And so I just really wanted to get this out there. And I really wanted Selah Ventures to have its day and to kind of bank on the opportunity. So it wasn't like I said, oh, I'm doing it my way in a solo or nothing. I have spoken to folks that could have been potential partners. I can say that actually, it's funny. Like I just did a new investment, and the CEO is somebody that I spoke to for quite some time. We've known each other for years, and we said maybe we'd do this as partners. And so maybe one day we will, once he sells the company. But like I'm not. It wasn't that I needed to do it alone, but I like the fact that I can consult who I need to consult with for certain, businesses that are interesting to me, that I can do the validation that I need, the due diligence that I need. But by being solo GP, and I'd love to hear from your perspective, I feel like it allows me to be completely authentic and myself, to be very direct, which is also who I am, and also be fast. And I think that founders really appreciate that. And maybe just last point on that, I'm sure you've seen this too, but partnerships are hard. I'm not against them. I'm all for them. I would love to have a partner, but it's hard to find that person that like Prince or Princess Charming, quote unquote, that wants to raise a fund when you want to, that is interested in fintech like you are, that is, timing, place, interest. It's so hard to do. And, we're seeing already teams that raised fund one together are not continuing to fund two together, which I think is kind of sucks for us, I think, going forward, because a lot of LPs are like, well, maybe investing in emerging managers, it's not as hot as it used to be, or whatever whatever that leads to. But I think because of that, I can understand why solo GP could seem like, whoa, that's a big deal, and it is. But I think there's also a lot of positives to it as well. But I'd love to, I don't know if you see it differently than that.
Yeah, no, there's so much there to run with. I think from an LP perspective, start with that. The point of view that solo GPs are inherently bringing more risk, I don't fundamentally agree with, so long as things are handled properly on the back end, as far as, and if there are any sort of exogenous events that happen and someone needs to take over the fund. So long as that's properly attended to, which it is in all serious cases.
Right.
I think that's fairly overrated. To your point on partnerships breaking up, I mean, one of the top reasons that startups themselves don't pan out is founders have a falling out. Yeah, I've seen it. I'm sure you've seen it plenty of times. And so there is a touch of irony to me that there's this emphasis on forming partnerships when it's known that partnerships break up. I think another thing is that when you have solo GPs, you get a little more authenticity and originality around what people want to do. So
it's true.
The reality is that if either of us had a partner, we would not be doing exactly what either of us view as this is what I want to bring into the world and this is how I think I can do it best. You'd be meeting someone in the middle on, well, this is what you want to do, this is what I want to do. We've Venn diagrammed it out, and this is like as close as we can get on portfolio construction and taste, and then you have committee concepts and discussions, and your point on speed. I definitely think that founders, one superpower I think solo GPs have, especially pre-seed seed writing collaborative checks, is the ability to move quickly. Not quick for the sake of skirting diligence, but I'll talk to a founder and they're like, what is your process like? And I'll walk them through it, but I'm like, look, you're talking to the investing committee.
Exactly.
There's not a Monday meeting that I need to run this through to get it to the head partner. So,
I fully agree. I just spoke to somebody, before this call too. And I said something which, maybe I wouldn't have said this in the past, but I really feel it now. Like you don't wake up one morning and think you're going to be solo GP because it's fun. Like it is definitely it's a difficult thing to do. It is challenging, but if we're both here, it's because we have the full conviction that we should be making these decisions, in the sense that full conviction in the vision, in the thesis, in the process. And so if I decided to go down this route, it's because I have that conviction. And so hopefully the LPs should, I think, see that there's something very strong about somebody that's not in their own echo chamber, because I'm sure we all do our own due diligence, right, as necessary. But we're here because we think we should be here. And I think that that's what makes it I think that's what's so interesting about a solo GP, actually, having that conviction, because that's what we also want to see in our founders.
What's a conventional point of view in venture that you think is bullshit?
Conventional point of view that's bullshit. Oof. I think a lot of venture has gone through major shifts to a better place. I think at least now, we all know that it's not about valuations are great and multiples are great. And I think the shift, at least that is I don't think it's just me saying it's bullshit. I think we're all seeing it's bullshit. It's that it's nice to have those up rounds, because that's in the end of the day what we all want to see and we all want to show. But really, 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 the success of a company is are they making money? Are they scaling? And then it's are they scaling well enough? And the end of the day, I'm not a growth stage investor, but I always need to think about those things. And I feel so many folks are I got an up round and I got a this, and there's it's, of course it's important. I also mentioned that the companies I invested in personally and the have, this is the multiple invested capital since I invested and the it's something for sure. But I think we've all kind of shifted now into a world where it's wait a second, how's the company actually doing? Is the headcount growing? Is it being done in a responsible manner? And I don't think I'm saying anything new. I think we've all been having these conversations, especially in the past 2-3 years, where it's not just about trying to get another fund to invest in and show that now you have good co-investors around the table. It's important, it's great, but I want to make sure that they can show that there's a playbook, that if they sold now to Goldman Sachs or JP Morgan, that they can do it for 5 other banks, for example. You know what I mean? Or 10 other banks. You want to see companies doing well. And I think we've all been calling that bullshit. So I don't think I'm saying anything new. It's good.
I think you are. I mean, graduation rates and markups are, we'll say, directionally aligned with performance, but there is a lot of noise to go with that signal.
Yeah, for sure.
I think a lot of it depends on your strategy. I think sometimes if you're on a fund one, it could be very tempting to focus and I know people who this is their bag, is like, we basically want to invest right before we think there will be a markup, or that's kind of the whole idea. And from there, that will enable an easier fundraise for fund two and so on. But whether companies that are on the verge of getting a markup are necessarily the ones that are creating sustainable long-term value, those are not always the same question. And by the time that gets answered, you're a decade on. And
no, it's true. By the way, another thing now that I think about your question about like what I think we should call bullshit on in a way is that, I think it was Fred Wilson who said it really beautifully in one of his blog posts, is that you don't learn how to drive by looking in the rearview mirror. And so I think that so many times when we're, fund ones and fund twos, like, yes, I put my track record for sure. But in the end of the day, and a lot of, I think, sophisticated LPs also say this too, it's like, what I've done and what we've all done indicates a lot, but it's more about like, what are you going to do forward, I think is more important. And so, I don't know, I just feel like there's a lot of like hoo-ha around like, what have you invested in and what have you done and what fund did you come from? And I think it's important. Don't get me wrong. It's helpful because it shows network. It shows, that you're disciplined, that you've gotten exposure to wonderful founders and investors, for sure. But really, really, in the end of the day, and I think that's why it's so hard to assess an emerging manager for a lot of these fund of funds and family offices. I get that. It can't just be because, you like my brown eyes. It has to be something more structured. But I think, there is a risk reward like in pre-seed, and there is also with an emerging manager. And I feel like, I don't know, I just really like that quote. And I think that if more investors would think about that too, we'd probably see more, I don't know, more EMs, but the right kind of EMs, if that makes sense.
Mm-hmm. This has been really fun. Adia, really appreciate it. If someone listening wants to get in touch with you, what's the best way for them to connect?
I'm very open on social media. So like you can reach out on LinkedIn. I share my email, which is my name, adi@selahvc.com. You can reach out on Twitter. A lot of folks do. I've met some great folks that way. So yeah, I even have an Instagram account for the fund. So feel free to reach out in all those different ways. And this was also really fun for me. Thanks so much, Joe. I appreciate it.
Hi, Joe again. Thanks for watching the show. If you'd like more of this in the future, subscribe to our channel. If you'd like to learn more about Seaplane Ventures, just check out seaplaneventures.com. Cheers.